Ladies and gentlemen, good day and welcome to Cipla Ltd Q1 FY2026 earnings update conference call. From Cipla's management, we have with us today Mr. Umang Vohra, Global MD and CEO, Mr. Achin Gupta, Global COO, Mr. Ashish Adukia, Global CFO, Ms. Diksha Maheshwari, Head Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Diksha Maheshwari, Head Investor Relations. Thank you, and over to you, Ms. Maheshwari.
Thank you, Renju. Good afternoon and a very warm welcome to Cipla's Q1 FY2026 earnings call. I'm Diksha Maheshwari from the Investor Relations team at Cipla. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Cipla does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmations, future events, or otherwise. I hope you have received the investor presentation that we have posted on our website. I would like to request Umang to take over.
Thank you, Diksha. Good afternoon to all of you, and we appreciate you joining us for our Q1 FY2026 earnings call. As Cipla marks its 90th anniversary, we take a moment to reflect on our journey. What began with a simple yet powerful purpose of caring for life has evolved into a global movement, reaching millions through accessible, high-quality healthcare. FY2024-25 was a defining year, marked by record financial performance, deliberate growth across geographies, and a robust innovation pipeline. Our One Cipla approach continues to drive excellence, agility, and collaboration. This quarter, we delivered a steady revenue of 6,957 crores with the EBITDA margin of 25.6%. What makes this performance commendable is that it builds on a strong prior year-on-year quarter, where we achieved the highest ever US generics revenue. This was achieved despite facing price erosion in one of our large products in the US, and it reflects our ability to sustain momentum and navigate market dynamics with precision, powered by the relentless commitment of our teams. Coming to the quarter performance, our One India business delivered a growth of 6% year-on-year for the quarter, breaching the threshold of 3,000 crores for the first time ever in any quarter of the financial year, which is it's now 44% of our global revenue. In our branded prescription business, we have a higher concentration of respiratory and anti-infective therapies, which is almost 30% higher than the broader market. This skew has naturally impacted our overall growth trajectory, given that these therapies saw a modest market growth of just 5% each as per IQVIA MAT June 25 for this year. We remain deeply committed to respiratory, a space where we continue to invest and evolve. This quarter, we launched Voltido Triosepala, an innovative addition to the differentiated triple therapy offerings, complementing products like Foracort G in our Syncobreathe franchise. All future therapies and triple combo products are set to be launched via a new division that we have recently created. This transition was completed in April and May, and we expect to see strong benefits from this strategy in the upcoming season. On a MAC basis, we have outperformed the market in several key therapies, including respiratory, anti-infectives, diabetes, cardiology, urology, dermatology, and pain, reaffirming the strength and breadth of our branded portfolio. Let me also share some key highlights from the market performance this quarter for our branded business. The chronic segment continues to dominate and now has 61.5% share of our total billing as per IQVIA MAT June 25. Within this landscape, our flagship brand franchisees have delivered a strong uptick. Foracort maintained its leadership as the number one brand in the IPM. We've added 5 new brands to the INR 100 crore club, taking our total to 29. Our presence in the brands ranking in the top 300 is also expanded, now reaching 23. Cipla leads in 6 therapies with top 5 rankings in IPM, underscoring our deep therapeutic expertise and the consistent execution across the portfolio. These achievements reflect our relentless focus on building strong brands, driving scale, and delivering value to patients across India. Our trade generics business continues to deliver strong growth during the quarter on the back of vigorous execution in distribution, new product launches, and technological advancements. Expanding our portfolio remains a key growth driver, with 7 new launches this quarter addressing specific patient needs. Our consumer health business continued its strong upward trajectory, with Nicotex, Omnigel, and Cipladine securing number 1 positions in their segments. We are driving healthy secondary growth and actively exploring opportunities to invest in products and channels to expand our distribution network. Operating profitability improved, reflecting the strength and scalability of our consumer health strategy. In North America, as expected, we delivered a quarterly revenue of $226 million. Albuterol ranked number 1 in the overall US albuterol MDI market with a 19.5% market share as per IQVIA. With over 50 million inhalers supplied from launch till now, Cipla continues to play a pivotal role in advancing respiratory care across the nation. In the US, we are adjusting to the older, larger products substituting themselves due to price erosion. And what is balancing these in is the new launches that is helping us sustain momentum. Lanreotide has already matched last year's average quarterly sales, and we see room for growth ahead. We expanded our portfolio with 2 key launches, Nano-Paclitaxel and Nilotinib, strengthening our presence in complex generics and oncology. We also signed an agreement to launch Cipla's first biosimilar in the US, expected in Q2 FY2026, a key milestone that marks our entry into this high-potential segment. On our US pipeline, we are now closer to commercializing generic Advair and welcome the promulgation signed by the administration for approving US facilities faster. In parallel, we remain committed to launching 2 to 3 peptide assets in this year. We are also preparing for key respiratory launches later in the fiscal year, including generic Symbicort and a couple of more inhalation assets. Normalized Lanreotide, full year of generic Apraxane, Nilotinib, peptide launches, and our respiratory pipeline will cushion our generic Revlimid top-line impact and fuel the long-term growth story for the US market. On the supply front, our US business is well diversified with roughly 1/3 of our US revenue from each coming from our US facilities, India operations, and strategic partners. We have also begun receiving supplies from our US FDA facility in China, further enhancing the scalability and resilience for our North America business. Our China facility now is fully utilized. Our One Africa business recorded a growth of 11% year-on-year in US dollar terms, with South Africa growing 6% in ZAR terms. In the private market, we delivered a robust secondary growth of 5.6%, significantly outperforming the market growth of 3.8%. Growth in One Africa was fueled by significant progress in key therapies, expansion of our tender business, and successful new launches, demonstrating our ability to unlock opportunities and deliver value across diverse markets. In the EMU business, our focus on deep market penetration is laying a solid foundation for sustained growth. This quarter, we delivered a healthy 8% revenue growth in US dollar terms, driven by impressive performance across both the DTM and B2B segments. This is notable since it was achieved despite ongoing geopolitical headwinds. Our ability to maintain margin stability by leveraging internal assets reflects the ability of our operating model. On the regulatory front, the US FDA inspected our Medispray facility located at Kundam, Goa in quarter 4 of FY24, and during this quarter, the inspection was classified as a VAI. During the quarter, the US FDA also inspected our analytical testing facility of Cytic Labs located in Navi Mumbai, and this inspection has also been classified as VAI. I would like to invite Mr. Adukia to present the financial and operating performance.
Thank you, Manji. Now I'd like to present key financial highlights of the quarter. While this quarter faced a lower revenue growth of our core markets, we continue in the path of strengthening our fundamentals and firmly focused on building long-term strategic gains. We reported a quarterly revenue of rupees 6,957 crore with a growth of 4% YOY. Out of this revenue, for One India, we breached the threshold of 3,000 crore for the very first time in the opening quarter of any financial year. The EBITDA margin, excluding the other income, stood at impressive 25.6% for the quarter, which is broadly flat on a YOY basis. Our strong EBITDA performance reflects the strengths of our diversified business model and sharp execution. Notably, we surpassed our internal EBITDA targets by a healthy margin, reinforcing our ability to deliver quality earnings even in a subdued demand environment. Reported gross margin after material costs stood at 68.8%, an increase of 156 basis points YOY, largely attributable to a favorable shift in product mix and strategic portfolio management. Total expenses for the quarter stood at 3,009 crore, reflecting an 8% increase over last year. This was primarily due to annual employee increments and increased investment in R&D. We remain committed to innovation and future readiness. Our R&D investments for the quarter were 432 crore, accounting for 6.2% of revenue. These investments were directed towards product filing and developmental efforts that will strengthen our pipeline and support long-term growth. The profit after tax for the quarter stood at 1,298 crore, representing 18.7% of sales. This marks a solid 10.2% YOY growth with an expansion of 106 basis points. ETR stood at 27%, which was same as on a YOY basis. Our free cash flow generation and operating efficiency continues to drive healthy net cash position. As on 30th June, debt on our balance sheet included lease liabilities, and the total debt stood at 459 crore, with net cash equivalent balance of 10,379 crore. Looking ahead, our priorities for FY26 will include, for One India, the aim is to focus on execution to regain the growth momentum and outperform the market in both branded prescription and the trade generics. In North America, we'll concentrate on enhancing commercial execution and accelerating the new product introductions. In South Africa, the emphasis remains on expanding the margin. EMEU, the top priority is to drive top-line growth by deepening penetration in core markets while maintaining strong margin trajectory. For the full year, we continue to maintain our EBITDA margin guidance of 23.5% to 24.5%, which is consistent with what we gave in the last quarter. I'd like to thank you for your attention and over to the moderator for Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. As a reminder to all the participants, please restrict yourself to 2 questions. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Kunal Dhamesha with Macquarie. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. The first one on the US business, now that we have seen some bit of price erosion in the Revlimid, and potentially I think everyone is trying to sell their license quota earlier. How our outlook on the US business growth remains for FY26 and FY27. And were Abraxane and Nilotinib already launched in Q1 or they were launched in July?
They were launched partially in Q1. We've not launched, the Q1 does not reflect the full momentum of the launch for Nilo and Pacli. I think on the other question, yes, Revlimid will be a critical phasing, and I think it might phase out the way you had suggested, where there might be in the first 3 quarters or so, there might be more Revlimid, and quarter 4 it will peter off. But I think that's how generally we think it will play out, although prices have already started correcting in the market.
And so our aspiration to achieve closer to $1 billion sales in US in FY27, we still believe that's possible?
Yeah, and that's largely out of our pipeline opportunity. So we believe that our pipeline should hopefully get us closer or surpass that, depending on how depending on the launch timing.
Sure. And this agreement to launch a biosimilar in the US market.
Sorry, you mentioned $1 billion in this year?
FY27.
Yes, closer to 27. Yes. So I just wanted to clarify that the comment was for the years after this year, not for this year. Yeah.
Sure. And that would include $1 billion would bake in Symbicort, right?
It would bake in a lot of our respiratory launches, including Symbicort. That is correct.
Sure. The second question is if you can provide more details on the imminent launch biosimilar, where you suggested that we have done a strategic agreement with a partner. So who is the partner? What product is it? Competitive landscape, Cipla's role, and the economics of the product, if you can provide details.
So I believe our partner has made a disclosure, and I think the product name is, it's in supportive therapy. It's not, for us, this is just the first launch into the segment of oncology, the segment of supportive care and oncology. It's as I mentioned, in filgrastim, and the partner has disclosed this in their release. So it's not a first.
Sure.
It's not a first launch by any player. There are many other players in this category of the market.
Understood. And if one more, if I may squeeze in on the India business, we have seen strong momentum in consumer. But if I exclude that consumer business, then we are at roughly 3% launch, and then again you have suggested trade generic has a strong momentum. So it seems branded generic has been muted, and within Respi you have highlighted, but within Respi, shouldn't be our portfolio be more chronic, which is inhalers, etc., and hence the volatility should be less for us versus the IPM Respi therapy?
Yeah, ideally, for us, so firstly, I think on a full year basis, we think that respiratory and the overall growth story will be very strong. I think we have very strong conviction on that. I think in this quarter, 2 things happened. I think the impact of the seasons being a little different, the fact that there were rains in the summer, the respiratory season, etc., didn't really take off as much, and that impacts how the trade stocks your product. And if you're the largest player in that category, I think it begins to impact you. Right? And that's what's happened to us. As I mentioned, in IQVIA, we saw respiratory and acute growing around 4 to 5%. That's pretty much reflected, in our numbers. The other thing is we also strategically aligned our team to further our growth of our triples combination. And now we have several triple launches coming in as well, which should also unleash the growth for us in the market. So It is a slower quarter for us, but, from a full year perspective, based on the realignment that we've done of of these new divisions we set up for the teams, as well as the fact that the season is recovered, we're very confident of where, this year being strong.
Thank you. Mr. Damesha, please rejoin the queue for more questions. Next question comes from the line of Tushar Manudhane with Motilal Oswal Financial Services. Please go ahead.
Thanks for the opportunity. So just on the respiratory again, at the industry level, there has been...
Mr. Manudhane, please go ahead with the question.
Am I audible?
No, you're not audible. Can you come a little closer to the mic and speak?
Is this better?
Yes.
Yeah.
Yes.
Yeah.
Go ahead.
So just on respiratory again, at the industry level itself, for last 12 to 15 months or for past 2 years, the growth has been a bit slow. So if you could throw some light on that aspect.
Yeah, I think, let me put it this way. We're coming off a fairly significant respiratory, quantum in the industry. There were some adjustments to price that were made on some of the large inhalers in the last 12 to 15 months by government notifications and by DPCO certifications, etc. So that has impacted some of our brands as they adjusted to the lower pricing. And the other thing is that, volume growth is there, but also it's coming from categories where now we've repositioned to get more programmed growth. So the growth is slightly slower in the industry, but, may be a phenomena of perhaps a year or a year and a half, but I think we are quite bullish about this going forward.
Understood. So just on US sales, given that we had good launches as well, so maybe specifically for FY26, if I may ask, would we be able to maintain this normalized annualized run rate of 226 for FY26?
Actually, it's a little indeterminate, and it depends on when Revlimid, the impact of Revlimid and how it comes off. We could see a larger impact of Revlimid in Q3, we could see it in Q4 or in Q2, right? So we don't know that, and it's very difficult to give a guidance range, but we are sticking to what we said at the beginning of the year for an overall US trajectory and growth. And I think what's more important for the market, which we realized at the last quarter, was to give a range of guidance on our profitability, which we've given. Because I think, the timing during the year will be difficult to predict, but on a full year basis, we believe that our margin should come into the range that we have set.
Thank you. Mr. Manudhane, please rejoin the queue for more questions. Next question comes from the line of Damayanti Kerai with HSBC. Please go ahead.
Hi, thank you for the opportunity. My question is on your respiratory launches planned in the US. So starting with Advair, will it likely be a 1H launch or it will go to 2H? And then for remaining launches, Symbicort and other inhalation product, I remember a few quarters back you mentioned that for critical filings, launches, etc., you will go for dual filing. So have you done dual filing for these products for risk management?
Yes, we have done double filings for most of our products from a risk management perspective on the respiratory side. And yes, generic Advair, it will obviously, the way we're looking at it, maybe a H2 launch in this year.
Okay, likely be a second half launch. Fine. My second question is on lanreotide. So I guess we have seen good pickup. So when do you see it going back to the level where you have come off, and then how do you see market share gain from there on? Do you think there is sufficient visibility for you to gain more market share here?
Well, it's a two-player market right now, right? It's a two-player market with we had the problem with our manufacturing, and before that, before we had that issue, we were at 30-35% of the market. And I think we are evaluating the market on fair share from a value perspective. and we intend to, over a period of time and not immediately, to a more respectable share of the overall market.
Okay, just a related query. Now you have both 505(b)(2) as well as the generic version. So, where do you see more room to gain the market share?
Well, the generic always has the maximum room because it's a completely substitutable product, and I think it depends on the production mix between the two and your ability to supply it to the marketplace. So generic always has, in any product category, generics will always have the ability to gain more market share.
Sure. Thanks for your response. I'll get back in the queue.
Thank you. Next question comes from the line of Surya Narayan Patra with Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. First question is on the albuterol in the US. We have seen this quarter there is a kind of meaningful ramp up. Is there any reason that we are seeing a kind of meaningful ramp up because of the competition factor, or it is some aggression from our side that is helping us achieving this sequential ramp up? Could you please give some sense about it, sir?
We've been on the path of this recovery for almost now, I think about 12, 13 months or so. So, our share had dropped about a year back, and then after that, we have consistently gained the market share. So, yeah, it's just maximizing the supplies that we have.
Okay. Second question is about our GLP plan. Let's say competitors have indicated their plan. So, if you could share what is our strength about this product opportunity and what is our plan, and are we kind of trying to play our on the strength of the cost position, or it is the distribution strength, or it is a market reach? So if you can provide some idea, and what is the kind of TAM that we are targeting through this product opportunity, if you can share some of your thought process about it.
I think I'll just start by saying that, for us, the entire GLP-1 category is more important than just looking at individual products within that, right? Okay. I think this category will shape up in a manner depending on several, pipeline assets. Our own endeavor is to be among the first wave of launchers, both, for the GLP-1 drugs. Right now, the earliest opportunity to launch a GLP-1 drug is presented by semaglutide, right? But, so it depends on how this market begins how this market is created between semaglutide and GLP-1 of the innovator brand, as well as the GLP-1 of the second innovator company. So we think this market is going to be very attractive, and it will be a large market, and Cipla will have a very definitive play here. We are not providing commentary because most players may have mentioned to you that they've integrated the full chain of the GLP-1 opportunity. Our, of semaglutide and the value chain there, our belief is that if it's going to be a huge opportunity, I think the value chains perhaps may need to be shared as against this one person investing in it. But, at the same time, so we have parts of the chain that we have internalized, and we have parts of the chain that come from a partner. So we are playing a mix and hybrid strategy. At places we have our own product, as well as we've also got a product from a partner's value chain as well. So we're trying to maximize the opportunity in total, between trying to manage our own supply chain, partner supply chains of others, as well as even taking a hard look at GLP-1 as a category as against just a single product that would launch in the near future.
Sure, sir. Will it be a kind of significant driver of growth for domestic business in FY27 itself?
Sorry, could you repeat your question? We lost you for a minute.
This will be a kind of a significant growth driver for domestic business in FY27 itself?
Yes, hopefully. I mean, if the market forms early next year, it will be a significant growth driver for the business.
Yeah, sure, sir.
We've seen that in other markets as well, similar markets where we've seen when GLP launch has been done, it has reshaped the market.
And we will be then the first wave of a Canadian launch and Brazil launch, sir?
Yeah, I think we will not provide that level of color. Just to say that the Canada opportunity for some of our competitors is real. I think it's out in the public domain, and we are not in the first wave launchers in Canada. That we are sure about. But some of the other markets, we will be among the first set of launches.
Sure, sir. Yeah, thank you. Wish you all the best, sir.
Thank you very much.
Thank you. Next question comes from the line of Neha Manpuria with Bank of America. Please go ahead.
Yeah, thanks for taking my question. First question on the India growth. Umang, if I remember correctly, last year we had the low base from the trade generic restructuring. While I understand that the industry growth has been slow this year and the FP realignment that we have done, shouldn't the India growth have been a little better than the industry given the low base in the trade generic segment? And this FP realignment that we have done, is that likely to impact our growth for a couple of quarters, or is it just restricted to this quarter that we saw an impact?
Yeah. So Neha, I wish I could have said, when you said shouldn't the growth have been, I wish I could have said no, but actually yes, the growth should have been higher. And I think when we isolate the problem, as we mentioned, we're strong on the GX, we're strong on the CHL, but on the prescription business, yes, largely because respiratory and acute is, almost 58% of the total mix. And unfortunately, this quarter, they've both grown at 4-5% level. So that impact has come into our numbers because that's the percentage of our business in it. It's been a little different this year because of the seasonal impact, and may have got a little bit exacerbated because we were also restructuring and realigning teams. And when you put new teams, you also take people from other teams to position these together. So, but where we are today, seasonal triggers have kicked in. We're seeing the impact in our growth now. We are seeing the ability of the triples team. We have already got a very strong share in Voltido Trio and hoping to replicate that with the other 3 launches that are hopefully coming there and launching through the team. So I think overall we're confident. But yes, if your question is should the quarter not have been higher in India growth, for sure, absolutely. I think it was a slower quarter than what we thought it would be.
And for the full year, we think we can grow in line with the industry now that, or it still depends. I mean, I understand it depends on the seasonality, but do we have confidence based on what we are seeing right now to grow that, Cipla's India business can grow in line with the industry?
Yes. At least for the next 3 quarters, we think that we can grow in line with the industry, for sure.
Okay, understood. My second question is on the margin. Ashish, I think if I look at this quarter's margin and the pipeline that we've mentioned in the US, shouldn't the margins, be higher? I understand that, Revlimid will go away, but given that we have Advair that we get launched, we already have a Braxin and Ritonavir, probably even Symbicort, then shouldn't that margin be a little higher than the range guidance range that we've given, last quarter?
No, in here I will stay with and some of the other expenses targeting that we did. And this is despite keeping in mind that our R&D expense were also higher this quarter because of certain R&D's APIs, etc., that we procured for developmental efforts. So, we had also expected that in line with Revlimid, the first quarters, 1, 2, 3, whatever that Umang said about the phasing, those quarters will be higher than the balance of the year.
Understood. And if I were to look at margins for next year, given the US pipeline, and if we get to that $1 billion, US sales number, is the lower end of the guidance achievable? I mean, can we keep margins at 23.5% in fiscal 27 as well?
Be a little early for us to give guidance for next year. So closer to the year end, when we're in position to give that guidance, seeing how the market shapes up after, be in better position to do that.
Understood. Thank you so much.
Thank you. Next question comes from the line of Bino Pattiparambil with Elara Capital. Please go ahead.
Hi, good afternoon. Just following up from a couple of previous questions. Umang, Revlimid, has it changed the QOQ over the last 3 quarters, say Q3, Q4, Q1? Or is it broadly similar?
Is your question what is the value of Revlimid in this quarter versus the last one?
Yeah, correct.
Yeah, that's more or less the same.
Okay. And from your statement that the new launches in the U.S. will compensate for the loss of generic Revlimid, should we read that this year's total U.S. will be more or less similar to last year's total U.S. despite Revlimid being there only for part of the year?
No, Bino, I think, see, your launches will come at different timelines. Okay, so it's difficult to say in terms of timelines, but we have plans for all our launches that are coming in will make up for the revenue loss that you have for Revlimid, and that will happen in a short to medium term.
Understood. So FY27, that 1 billion number is the number to go by more like. One last question, if I may just come in. You must have seen one of the Indian players has taken a significant stake in Adcock Ingram in South Africa. Does this change the market in any way or the competitive dynamics for you in any way?
Well, I would think that so Adcock, from what we understand, already had a significant relationship with NATCO, and so I'm not sure that the competitive dynamics will change significantly. Also, Adcock has a large share of the OTC portfolio as much as it does on the branded side. So maybe, yeah, I mean, in the sense that if they get more pipeline from NATCO, then yes, I mean, competitive dynamics would change. But otherwise, the existing relationship also has a significant support to the Adcock engine from NATCO.
Okay, thank you. I'll jump back.
Thank you. Next question comes from the line of Maitri Seth with Choice Institutional Equities. Please go ahead.
Hi, can you hear me?
Yes, Maitri.
Yeah, so thank you for the opportunity. Just few questions. Once again on albuterol. Given that we have a 19.5% market share, what is the kind of revenue output that we can expect from this drug, and how much is it contributing to our North America revenue currently?
Ashish? No, so we don't give out molecule-wise data. It's one of our strategic respiratory assets in the U.S., and we would like to maintain the market share out here. And if capacity allows us, then we'll obviously grow that as well.
Maitri, you can hear us, right?
We have lost the line of Maitri. We'll take the next participant, that is Ankush Mahajan with Sanctum Wealth. Please go ahead.
Thanks for the opportunity. Sir, next quarter we are going to launch one biosimilar in the U.S. market. What is the strategy for the another biosimilars to launch in the U.S. market? Would you throw some more light?
I think maybe I can answer the question in this manner, that we will probably in-license a few assets through partnerships in the near term, and maybe launch our own biosimilar assets somewhere towards the 29-30 time period.
So in terms of the licensed biosimilars, sir, what are the other, what is the timing line, sir, for this licensed biosimilars? We are launching 2 or 3 or something like that?
No, what we are saying is right now we're launching 1.
Okay.
And that's through partnership, and we will have a few partnerships through which we will launch in the near term, and in the longer term it will be our own assets.
Okay. Thank you, sir. Thanks very much.
Thank you. Next question comes from the line of Tushar Manudhane with Motilal Oswal Financial Services Limited. Please go ahead.
Yeah, thanks for the opportunity again, sir. So just on this biosimilar again, this is not an interchangeable drug as such. So, it would be like we'll have to create prescriptions. So, what gives us sort of right to win on this product? And in fact, just to, the earlier participant question, like the in-licensing product, how does it help for Cipla in overall scheme of things? And one more similar, that how much overall investments are we earmarking for biosimilar as a space?
So I think let me answer the first one. Look, I think the way it would help us is the right to win is our oncology presence and our team presence in the US. We have been selling into the institution channel. We sell lanreotide, which is a very large business for us, and we sell 2 variants of it, the ANDA and the 505(b)(2), and we have several other products that we sell. It's essentially the same channel in which the biosimilar goes. As we begin to unfold our plan for biosimilars, I think the first asset always is an asset that gives you the ability to begin to create a portfolio as well as understand and grow the market, and that's what we're trying to do with the first asset. We have committed to a joint venture almost, the joint venture has had a plan where we had committed almost upwards of $100 million to the joint venture for the towards our share of the development of the biosimilars. And we are holding with that, and we might actually even increase our outlay in the next couple of years towards it. So we are actively building a biosimilar pipeline in the long term. And in the short term, we are launching biosimilars in partnership with others. So I think that is our overall strategy for bio.
Got it, sir. Thanks a lot.
Thank you. Next question comes from the line of Siddharth Neganti with Chanakya Wealth Creation. Please go ahead.
Thank you for the opportunity. Just following up on the questions on trade generics, just wanted to understand, given what you mentioned about a possible sort of impact on the branded generics, what would be the quantum of growth in the trade generics business, and how do you see this going forward in context of the overall IPM growth?
Yeah, maybe there's just 2 or 3 things that you should keep in mind before I try and answer that question. Last year, the base of the trade generics business was quite significantly lower because of the fact that we had reacquired the distribution operation from our partner. So therefore, a superior growth rate that we are seeing at this time is also a function of the base of that, the base of the previous quarter, plus the ability to get back to significant growth by our trade generics business in this, in this year. Going forward, we think that the trade generics business will grow at IPM or about IPM. I don't see any reason why it should be different than the prevalent growth in the IPM at all. So if the range you're asking for, it could be between 8 to 10%.
Okay, because sir, just to follow up on that, we've been seeing trade generics grow faster than IPM in the past. And do we believe that given the additional competition that's coming into trade generics, our trade generics business is likely to grow at that rate, or do you see overall trade generics as a space growing at that pace?
I think, when you look at the IPM, just as a fact, I think a large share of the IPM volumes are actually from overall IPM is from products which are more acute and, are distributed inside the country. So we believe that trade generics will continue to grow at the same rate as the IPM. Now, obviously, trade generics do not sell as many of the chronic therapies as you've seen on the branded side. But we think that the trade generics will grow at the same rate. And, we are not, while competition is great, it expands the market for trade generics. And we have some very large brands within the trade generics segment. So I think we are quite hopeful of this segment as well going forward.
Got it. My second question was on GLP semaglutide. Given the relative competitive strength for Cipla is in other therapies, right? And this is a much smaller percentage of sales as per IQVIA. How do you believe there is a path in terms of creating a superior right to win in this? And do you see any differentiation possible for you to create a superior market share for yourself in that GLP-1 space?
Yeah, I think it's a good question. I think we do think that the GLP-1 market will be crowded. I think the way you make portfolio choices here will perhaps be the most important. So right now, the way we are thinking of this market and the reach that we are trying to assign with it, I think we are looking at GLP-1, as I said, as a full category as against just sema or just the other variants within it. So I think that's how we plan to play this market.
Got it. That's useful. Thank you so much.
Thank you. Next question comes from the line of Shashank Krishnakumar with Emkay Global. Please go ahead.
Hi, thanks for taking my question. My first question is again on the domestic piece, particularly the trade generic business. This quarter on the relatively lower 1Q base last year, would it have grown at low single digits or was growth a bit higher than that? Just wanted to check that.
Yeah. Achin, do you want to comment?
I think what Umang has already explained, there was a lower base last year, and on that there was a significant growth which was delivered this year. The seasonality which we saw on the anti-infective side also affects the trade generic side. So typically Q1 is not as strong a quarter for this business, and I think going forward we will see it growing in line with the market and hopefully beat the market as well.
Got it, sir. So my second question was on the Indore facility. Now, given that it's been slightly more than 2 years now, so is that facility up for a reinspection this year, and how prepared are we in case we face a reinspection sometime this year?
Yeah, I think you're right. We do expect a reinspection. General timelines are within the 2-year period. So we are expecting a reinspection from now, anytime from now, all the way till, we were inspected in February, I think. So anytime from now till February, yes. We are prepared for the inspection and, we're looking forward to it.
Okay. Thank you. That's helpful. All the best.
Thank you. Next question comes from the line of Kunal Dhamesha with Macquarie. Please go ahead.
Hi, thank you for the opportunity again. A couple of logistic questions. One on the 120 crore other income. Could you share how much of that is PLI? And then what would be the sustainable PLI contribution that we can factor in for the coming quarters and maybe coming years?
See, on other income, first of all, it is below EBITDA. I just want to clarify that. So that has treasury income sitting there mainly, and that also has exchange gains that will be sitting there. These are the two big elements, and then there'll be few others as well, smaller items. So that's on the other income. You had one more question which I missed. I'm sorry. Can you please repeat that?
So I don't think I framed it. I think I referred to other operating revenue of 120 crores.
Other operating income has mainly your PLI sitting out there, okay? And export incentives and small bit of scrap sale, etc. So PLI is a material component as part of other operating income.
So how should we think about this PLI? Because it is linked to the growth in export revenue, right? And with revenue coming down.
Absolutely right. Yeah, you're absolutely right. It is linked to the complex portfolio that you sell in India or outside of India. But of course, there is also a cap of how much benefit you can get from the government. So it's as per the scheme. And it was there last year as well.
Sure. And then the other expenses, which have come down by almost around 80 crores, excluding R&D, on a sequential basis. So was there any one-off in Q4, or this is a run rate that we should take going forward, what we have seen in Q1?
Run rate should continue if that's the question. Of course, in Q4, there may have been some one-off that gets eliminated. But more or less every quarter will have some one-off, etc. But overall, this run rate should continue. Hopefully, after Indore, what will happen is your remediation costs should come down. That is one trend that should be noticeable.
Sure. And then the last one on the India business. So it's good to see that we have added 5 brands in the 100 crore plus category in the last 1 year on a year-on-year basis in this quarter. My question is, how much time on an average does it take to reach 100 crore kind of scale for a particular brand in India now?
So it depends on the category that you're talking about, the therapy area, and our strength in the space. Some of the new launches that we've done recently have been quite successful, like Voltido Trio has started very strong. We launched empagliflozin brands in March when the LOE happened. We're already up to 4th rank in that. So it depends, but typical for a new brand, it takes a while to reach 100 crores. And if you see all of the 100 crore brands we have amongst the maximum number of them in the market.
Sure. So is it also fair to say that while GLP-1 could be a very big category for India market as such, but given the competitive landscape and given that there is no readily available market which is already formed, the ramp up or the kind of brand that we can see would take some time to reach kind of higher levels? Is that a fair assessment?
So this is a very unique space where if you see the last 3 months of reported IQVIA data, already the innovator brand has clocked around 50 plus crores. So this is one of the fastest ramp up that has been seen in India, and similar trajectory has been seen in other parts of the world. So given the disruptive nature of this category and not too many older products which address the same unmet medical need, one would expect this ramp up to be much faster.
Sure. Great. Thank you and all the best.
Thank you.
Thank you. Next question comes from the line of Sayan Mukherjee with Nomura Securities. Please go ahead.
Yeah, thanks, and good afternoon. Umang, the initial market share that you're seeing for the new launches, paclitaxel and nilotinib, if you can share, how should we think about how big these two products are likely to be for Cipla in fiscal 26?
Shayan, Nanopacly is already, there are 2-3 players in the market already. I think two of them are basically selling the same innovator product, and the other two are 505. One is an ANDA and one is a 505(b)(2). So, if you take the total market, I think price is not the same as the innovator price at this point in time. I can't give you a ballpark sort of an estimate, but I can tell you that the market is big enough to accommodate perhaps more vials than what we can produce.
Okay. And on nilotinib, how should we think given 505(b)(2) and limited competition at this point?
Yeah, so I think on Nilo, perhaps the market opportunity may be more limited, Sayan, because the B2 will have a lot of relevance when there are not too many ANDA players. Yeah. But once you have more ANDA players coming in, then the B2 opportunity goes down a little bit. So I think maybe if you model it out to say that, others launch 6 months later, the B2 opportunity will probably maximize itself in the first 6 months, relatively more than what it will do after.
Right, understood. And my second question, Umang, also on the biosimilars front, you mentioned about Pelgrastim licensing and couple of more, and then through the JV you are committed to invest $100 million, and then you also mentioned about your own product coming to the market sometime in 29-30 time frame. I'm just wondering, what's your, how are you thinking about the space, and what are the key milestones that we should look at for Cipla over the next, say, 2-3 years as far as biosimilars are concerned?
So, Shayan, let me put it this way. Let's talk about the enabling areas in the business, right? I think when we first set up our decision to get into biosimilars 3 years back, most biosimilars had very extensive phase 3 requirements from the US, right? I think that is beginning to change. When that changes, 2 or 3 things happen. You can expand your pipeline faster because now you don't have to, pencil in 2 years of phase 3 studies or 1 year of phase 3 studies, right? So that happens. Second, you don't need to spend the same amount of money for one product, and therefore you can increase your engine a bit. So the way we are looking at this now is that in some way a biosimilar engine for a company like us will begin to make an investment return ratio a little bit more than a complex generics product, but not too far from it. So you could be spending 15, 20, 25 million depending on the product minus phase 3, which is pretty much what, will be ballpark roughly what you would spend on a complex generics product if the phase 3 requirement gets waived. The second big trend is interchangeability, because of which market access becomes easier. And I think what this will cumulatively do, Sayan, as conjecture, is that if you have more number of people coming in the market, the relative share that innovators keep holding on to of the biosimilar universe becomes significantly lesser. And there is more room for generics to grow because rebating reduces significantly. So I think that's the overall trend we're looking at. We don't have any product out of our own engine, Sayan, which will come out before 29-30 because that was by design. So we will deploy capital towards in-licensing, but by and large, our pipeline will only start coming in 29-30.
And Umang, this clarification of $100 million that you're committed, and maybe it will be a little more. So this will be invested over what time frame?
In the next 3 years. And out of that, Sayan, we've already spent, I'd like to believe maybe 20-30% of that.
Okay.
This was 3 years back. We had committed cumulatively with our partner about 180 million or so. The partner share was 40, ours was 60%. And so, and that assumed at that point in time that phase 3s would be very expensive. Now that requirement has changed, so we can put more assets into the pipe.
And Chan, it's part of our R&D budget, so it comes as that.
Coming into our within that. It's in our numbers.
I see. Okay. Thank you. Thanks.
Thank you. We'll take the last question. That's from the line of Krishnendu Saha with Quantum. Please go ahead.
Yeah, did I hear correctly that there was some lack of capacity in AlphaStreet, so because of that, we could not take a larger market share? I could have misread it or misheard it.
Yeah, no, Krishnendu, let me clarify. What I meant was that we are maximizing our capacity out here and able to supply all of it. And of course, we have been able to shape it for ourselves. So if we build more capacity, we can increase out there. But from market share point of view, at 19.5, maybe some more improvement, but that's where we can go to with the current capacity.
I see. So will you be putting up capacity, or you're okay with it just in the partner put together?
Sorry, this is our own capacity. We supply it from India out here, and of course we have capacity in Fall River as well.
So this is the capacity we'll keep, right? That's in the future also.
Absolutely.
Yeah.
It's our own capacity.
Oh, thanks. Just clarifying. Thanks a lot. Thank you. Best of luck. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to Ms. Diksha Maheshwari for closing comments.
Thank you, Renju. Thank you everyone for joining in. If you have any other questions, please write it to investor.relations@cipla.com.
Thank you. On behalf of Cipla Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your line.